as we make these discussions, have these discussions about what is going to transpire in the virtual space in relation to political speech, in relation to religious speech. What we want to do is make certain that it's fair and that we are protecting individuals' right to free speech. You know, Senator, I did listen to make certain that it's fair and that we are protecting individuals' right to free speech. You know, Senator, I did listen to make certain that it's fair and that we are protecting individuals' right to free speech. You know, Senator, I did listen to
Boa noite, pessoal. Boa noite, sejam todos bem-vindos aí ao nosso canal Forex do Além. Boa noite, pessoal. Boa noite, sejam todos bem-vindos aí ao nosso canal Forex do Além. Boa noite, pessoal. Boa noite, sejam todos bem-vindos aí ao nosso canal Forex do Além. Boa noite, pessoal. Boa noite, sejam todos bem-vindos aí ao nosso canal Forex do Além. Boa noite, pessoal. Boa noite, sejam todos bem-vindos aí ao nosso canal Forex do Além. Boa noite, pessoal. Boa noite, sejam todos bem-vindos aí ao nosso canal Forex do Além. Boa noite, pessoal. Boa noite, sejam todos bem-vindos aí ao nosso canal Forex do Além. Boa noite, pessoal. Boa noite, sejam todos bem-vindos aí ao nosso canal Forex do Além. Boa noite, pessoal. Boa noite, sejam todos bem-vindos aí ao nosso canal Forex do Além. Boa noite, pessoal. Boa noite, sejam todos bem-vindos aí ao nosso canal Forex do Além. Boa noite, pessoal. Boa noite, sejam todos bem-vindos aí ao nosso canal Forex do Além. Boa noite, pessoal. Boa noite, sejam todos bem-vindos aí ao nosso canal Forex do Além. Boa noite, pessoal. Boa noite, sejam todos bem-vindos aí ao nosso canal Forex do Além. Boa noite, pessoal. Boa noite, sejam todos bem-vindos aí ao nosso canal Forex do Além. Boa noite, pessoal. Boa noite, sejam todos bem-vindos aí ao nosso canal Forex do Além. Boa noite, pessoal. Boa noite, sejam todos bem-vindos aí ao nosso canal Forex do Além. Boa noite, pessoal. Boa noite, sejam todos bem-vindos aí ao nosso canal Forex do Além. Boa noite, pessoal. Boa noite, sejam todos bem-vindos aí ao nosso canal Forex do Além. Boa noite, pessoal. Boa noite, sejam todos bem-vindos aí ao nosso canal Forex do Além. Boa noite, pessoal. Boa noite, sejam todos bem-vindos aí ao nosso canal Forex do Além. Boa noite, pessoal. Boa noite, sejam todos bem-vindos aí ao nosso canal Forex do Além. Boa noite, pessoal. Boa noite, sejam todos bem-vindos aí ao nosso canal Forex do Além. Boa noite, pessoal. Boa noite, sejam todos bem-vindos aí ao nosso canal Forex do Além. Boa noite, pessoal. Boa noite, sejam todos bem-vindos aí ao nosso canal Forex do Além. Boa noite, pessoal. Boa noite, sejam todos bem-vindos aí ao nosso canal Forex do Além. Boa noite, pessoal. Boa noite, sejam todos bem-vindos aí ao nosso canal Forex do Além. Boa noite, pessoal. Boa noite, sejam todos bem-vindos aí ao nosso canal Forex do Além. Boa noite, pessoal. Boa noite, sejam todos bem-vindos aí ao nosso canal Forex do Além. Boa noite, pessoal. Boa noite, sejam todos bem-vindos aí ao nosso canal Forex do Além. Boa noite, pessoal. Boa noite, sejam todos bem-vindos aí ao nosso canal Forex do Além. Boa noite, pessoal. Boa noite, sejam todos bem-vindos aí ao nosso canal Forex do Além. Boa noite, pessoal. Boa noite, sejam todos bem-vindos aí E agora? Tá ruim. Como é que tá o som aí? E agora? Tá ruim, né? E agora? Tá melhor? Melhorou o som? Melhorou o som? E agora, o som tá melhor, pessoal? Ou tá muito ainda barulhento? Então pegaram aí, né, pessoal? Vocês pegaram aí o movimento, né? Entenderam aí quando for abrir? O Forex aqui, pessoal, é diferente do mini índice, mini dólar, tá? Não tem leilão de abertura, não tem nada disso, tá? É bem diferente lá do mini índice, mini dólar. E ele é muito direcional, tá? Dentro dos horários. Fora dos horários, ele é pior do que o mini índice, mini dólar, tá? Fora dos horários que ele é para movimentar. Ele fica dando viola. Ele fica andando para cima e para baixo toda hora, tá, pessoal? Agora, dentro dos horários, o horário que é melhor: 22 horas, 7 horas da manhã e 11h30 da manhã. São os 3 horários aí que vocês têm que anotar aí. Esses são os 3 horários melhores para operar o Forex. Então, normalmente, as pessoas, quem opera só Forex, não mexe com B3 nem nada, só opera esse horário para se posicionar, entendeu? Ele se posiciona na compra ou na venda, em qualquer ativo. A gente está trabalhando aqui com Dow Jones e com ouro, né? O ouro é o que mais dá dinheiro no Forex, é o que mais dá dinheiro, porque ele é muito líquido e muito volátil. Ele é o mais líquido de todos. E o Dow Jones, ele é o mais líquido de todos os índices, né? É o S&P 500 e o Dow Jones. Aí a gente escolheu o Dow Jones aqui porque o Dow Jones é o mais tradicional, mais antigo, né? E questão de dinheiro, né? Qual que dá mais dinheiro? É o ouro e o Dow Jones. Como a gente precisa de liquidez, que a gente faz as operações, né, rápidas, aí eu escolhi esses 2 ativos que dá maior liquidez aí. São muito rápidos aí. Você entra na operação, você sai rapidinho. Eu coloco os pontos aqui de entrada e de saída, mas você fica aí à vontade para querer sair e entrar de novo nas operações. E ele é muito... O Forex é muito direcional, tá, pessoal? Quando for 8 horas também, ele dá 8 horas não. Quando for 9 horas. Quando for 9 horas da noite, ele dá uma osciladazinha. Mas é uma oscilada muito complicada, tá, pessoal? É uma oscilada para você fazer operação rápida. Não dá para você ficar muito tempo posicionado, não. É porque é a hora que abre o diário, né? Tanto do ouro como do Dow. 9 horas da noite. Aí ele abre e ele fica muito indeciso. Aí ele não sabe se sobe, se desce. Aí é a hora que você começa a fazer operações curtas. Aí dá pra você fazer umas operações uma atrás da outra. Aí quando dá 10 horas, aí ele toma um direcionamento forte, tá? Aí ele toma um direcionamento forte. Muito forte. Aí pessoal, galera, aproveita para fazer essas operações aí comigo, que sexta-feira eu tô de férias, tá pessoal? Na verdade, quinta-feira já não vai ter, amanhã, né? Hoje é o último dia do Forex aí, tá? Hoje é quarta-feira. Então quinta-feira já não tem mais Forex, que eu viajo na madrugada de quinta para sexta. Aí eu vou estar me preparando aí para viajar, tá? Então hoje é o último dia do Forex aí do ano. Então aproveita para fazer essas operações aí, tá bom? Aí a gente volta dia 2 de janeiro. Dia 2 de janeiro vocês já agenda aí com vocês, tá bom? E a galera ainda que não entrou aí no nosso grupo, nós temos um grupo no Forex. Quem ainda não entrou aí no nosso grupo do WhatsApp, tá aí o link aí, tá? O Forex não para não, o Forex é direto. Fica movimentado direto, não é direto. Dezembro, janeiro, fica do jeito que tá. Esse mês passado é 24 horas, né, cara? É direto, todo dia. Eles só param, acho que abriu aí, pessoal. Acho que eles só param, acho que é só ano novo, Natal e Ano Novo. Fica atento aí, tá, pessoal? Olha o tamanho do spread aí, ó. O spread já é grande, né? Esse spread aqui que mata. Aí quando é mais tarde, 22 horas, o spread diminui. Esse spread aqui, ó, quando é durante o dia, ele fica só 20 pontos. Aqui o spread chega a ficar 50, cara, nesse horário. Aí vamos ficar atento aí, tá, pessoal? Pessoal, quem quiser fazer uma venda, tá? Uma venda no ouro, a venda seria melhor aqui, ó. Tá bom? Bem aqui, ó. Média de 21 aqui, ó. 14,74 e 75 aqui, ó. 14,74, 75 a venda no ouro aí. E o Dow, quem quiser já comprar aí, pessoal, entra na compra aí. Seu stop tem que estar aqui, ó. Não tem jeito, tá? Seu stop vai ter que ser aqui no 27,620. E aí vambora. Vambora aí que o alvo aí é longo, tá? Se ele der continuidade à subida aí, nas próximas 2 horas, que vai dar às 22 horas, nós temos alvo aqui em cima, tá? Nós temos alvo aqui no 27.726, beleza? E aí tem que estopar aqui nesse candle grande aqui, ó, vermelho, que fez aí de 2 horas. Tá? Vai ser aí no 620. E aí vambora. Tá bom? Aí caso o ouro perca esse fundo aqui, ó, 14,74 e 13, perdeu aqui, ó, entra na venda, tá bom? Perdeu aqui, entra na venda. E aí vambora. Fala, Senna, tudo bom? E aproveita, pessoal, aproveita para fazer aí todo ano, final de ano, eu faço uma propaganda aí, a campanha, né, de doação, tá? Eu peguei essa instituição aqui, ó, todo ano eu faço, tá? Lá Amigos de Jesus. Então é um lar lá que acolhe as crianças, né, cometida de câncer. E aí onde que os pais, né, vêm do interior para fazer o tratamento e não tem onde ficar. Aí esse lar aqui, ó, acolhe as pessoas carentes para enquanto estiver lá na cidade, né, que é de Fortaleza, elas têm pelo menos um pouco de dignidade lá, né, em conforto, porque esse tratamento é doloroso, tá? Então a gente ajuda aqui com alguma contribuição. Todo ano eu faço essa campanha antes de eu sair de férias, tá? Aí quem quiser entrar no site aí, pessoal, tá aí o site, ó. Aí vocês só clicar aqui, ó, quero doar, entendeu? Aí entra em contato, aí tem essas formas de doação, aí entra em contato lá, né? Aqui pede para agendar, mas tem um telefone e tem um e-mail. É só entrar em contato lá que eles fornecem a melhor opção para você estar ajudando aí essa casa aí, tá bom? Tá aí o link aí na descrição do vídeo, tá, pessoal? Do chat aí, no YouTube. Valeu, muito obrigado aí, tá, pessoal? Vamos lá. Alguém posicionado aí, pessoal? No Dow? No ouro? Como é que tá aí? E aí, pessoal, quem quiser se inscrever no canal Forex do Além, tá aí o link aí, ó. Haroldo, mas é bem facinho aí, tá? Bem aqui, ó. Tá vendo esse F aqui? clica nesse F, aí você vem cá, tendências, aí você coloca Move Average, clica nele, aí coloca 21, simples, aplicar High, aqui ó, que tem essas opções aqui ó, aí você clica aqui, High, e aqui tem a opção simples, exponencial, small tal, você coloca simples, coloca a cor que você quer e aplica OK, tá? É bem facinho, aqui ó, função, indicadores aqui ó, aí vem cá tendência, aí vem cá Moving Average, clica ali, aí já sai aqui parâmetros, só clica em parâmetros, coloca 21, simples, high, OK, já entra na sua tela, beleza? Bem fácil, cara. Se você tiver com dificuldade aí, dá um toque aí que a gente ensina de novo. Então, pessoal, nós temos venda aqui no ouro aqui, no 14,74,75 e venda aqui no 14,74,13, se perder aí. E o Dow vai para cima, tá, pessoal? O Dow para mim aí vai-se embora, tá? Ele deve voltar lá para a região de 2 horas atrás, aqui em cima, ó. Deve voltar para esse topo aqui, ó. 730. 27,730. Bem aí. Rompeu aí, ele vai embora, tá, pessoal? Pra mim aí o Dow Jones vai subir tudinho de novo aí. Se o Donald Trump não mudar a conversa dele, né? Se ele não mudar, ele vai vir embora aqui, vai subir aqui, ó. Até sexta-feira ele volta pra cá, ó, 28,100. E o ouro volta pra aí, tá, pessoal? O ouro deve voltar aqui pra região 55,60. Entre 61 e 55, tá bom? Por aqui. O mercado ele fica um pouquinho parado, ó, porque não tem, o mercado asiático não abriu às 22 horas, o mercado europeu só às 7 horas da manhã, né? Mas quando abre o mercado asiático, pessoal, costuma dar umas porradas aí. Aí quando dá 7 horas da manhã, aí ele continua a sequência ou ele reverte. Foi o que aconteceu hoje. Quando deu 22 horas, ó, subiu o ouro. Aí quando deu 7 horas da manhã, reverteu, voltou tudinho. E quando isso acontece, cara, é bom demais. Porque você ganha na compra e ganha na venda, né? Então ficar atento aí 7 horas da manhã. Sempre. Quem opera o Forex tem que ficar aí atento nesses horários, tá, pessoal? Hoje eu peguei aí esse horário e coincidiu que o Trump estava lá na Alemanha. Rapaz, quando abriu o mercado 7 horas da manhã, era umas 6 e pouco da manhã, né? Fui deixar o menino no colégio e aí eu voltei. Quando eu voltei era umas 7 e pouco, 7h10, 7h15. Rapaz, só vi a pancada. Aí eu falei, é notícia. Eu tentei achar notícia rápido pra ver o que era. Aí saiu no Twitter dele. Tem que ter o Twitter do cara também, tá, pessoal? Do Donald Trump. É só entrar lá e botar lá o Twitter lá. Aí saiu o Twitter dele lá dizendo que estava bem próximo às negociações da China. Por isso que caiu o ouro e subiu o Dow. What? É isso aí, Haroldo. Parabéns, cara. Sucesso aí. Mete o porrete. Aproveita para fazer inscrição no canal, pessoal. Quem não se inscreveu aí, ó, se inscreve no canal e vamos trabalhando aí.
Talk about her tough stance on Wall Street, the wealth tax, and the trade war with China. This is Bloomberg.
Olha o dólar subindo. O Dow e o ouro subindo, ó. Vendemos aí, pessoal. Estamos vendidos no ouro. Aí tem que estopar no R$ 78,75, tá? Aliás, 77,75. E aí o gain, pessoal, naquela região que eu falei pra vocês, ó. Caso ele venha aí, a gente coloca aqui na mínima das 2 horas, ó. Bem aqui, ó. Aí o gain aí na 14,71,20. Ok?
Welcome our viewers on Bloomberg TV and listeners on Bloomberg Radio for a special interview. A candidate for U.S. president who's promising to disrupt the status quo for Wall Street and the wealthy. What you missed, co-host Joe Weisenthal joins us with the special guest Joe.
Sherry, thank you
Pode
very
vir para
much
cá
for
também,
joining.
pessoal, ó.
Pleased to be joined here with Senator Elizabeth Warren.
Essa região aqui, ó.
Let's start with the big question.
757, 55 aqui, ó.
Our boss is running against.
I've heard that.
You've heard that? Okay, heard that. So have we. From what I've read in reports, he's spending perhaps more than all of the other candidates combined on TV ads. I think maybe with the exception of the other billionaire in the race, Tom Steyer. How much is this for you evidence of the need for wealth?
So it's about the need for a wealth tax, but it's a bigger picture as I see it. Look, I'm a capitalist. I believe in capitalism, but markets without rules are theft. And part of those rules are that everybody's supposed to pay fair share on taxes so we can reinvest it in opportunity for all Americans. And that's what a 2-cent wealth tax is about for me. So the short version of the wealth tax is this. Your first $50 million of accumulated wealth every year. But your $50 millionth and first dollar, you got to pitch in 2 cents, and 2 cents for every dollar after that. When you hit $1 billion, it goes to 3 cents.
Now, you say you're a capitalist. There are numerous people, probably many Bloomberg TV viewers who suspect otherwise. And there's a parade of billionaires who say, oh, if Elizabeth Warren is elected president, the stock market is going to plunge 25%. I don't put a lot of weight on those predictions. That being said, I'm curious, Under a Warren administration, would the performance of the stock market be something you cared about?
But what I care about is an economy that works not just for the billionaires and millionaires, but an economy that works for everyone. Look at what's happened in America. Stock market goes up, GDP goes up, unemployment is low. But what's happening to working families across this country? It's been a generation and it's been very little growth in income. But at the same time, families are squeezed for housing, for health care, child care, the cost of sending a kid to school. Those are all through the roof. So families take on more and more debt. They're squeezed harder and harder. And by the way, that's part of why I want to see a wealth tax. Because it's what we can do with that wealth tax, how we can invest in an entire generation of young Americans.
A technical question about the wealth tax that often comes up is that there are several billionaires or people with over $50 million who have their money, a big part of it tied up in a liquid private stock. I always see people in Silicon Valley talking about this with the wealth tax. And again, it applies to one of your rivals, our owner here. How do you levy a wealth tax of 2% or 6% against someone whose wealth is tied up in a private share?
Well, you can levy it. You can give them time on how the collection works over a period of time. But it doesn't mean you get to just say, hey, I don't have to pay anything, because it would be a problem for me to have to sell off some of my stock. Look, it's a problem maybe for everybody else, but keep this in mind. The 99% in America, they pay 7.2% of their total wealth in taxes. The top 1/10, that is people that would be affected by the wealth tax, they're paying 3.2% of their total wealth in taxes. So my view is asking them to pay 2 cents more means they're still not carrying a fair share. This is, for me, about not just numbers, but value. That 2 cents that people are using to continue on these huge fortunes, to continue to grow those fortunes. And what are those fortunes growing at? I don't know, 6%, 8%, 10%? Just means they may not grow as fast. You put that 2% investment in America, in a whole generation, that's universal child care for every kid. It's universal pre-K for every 3-year-old and 4-year-old. It's raised the wages of every child care worker in America. It's $800 billion into our public schools, a federal commitment. It's about making technical school, 2-year college, 4-year college tuition free. It's $50 billion for historically black colleges and universities. And it's canceling student loan debt for 43 million Americans. That's an investment in an entire generation.
Let me ask you a question about your Medicare for All plan. When you unveiled how you are going to pay for it, the media hounded you on that question quite a bit, including new taxes on corporations, additional tax on billionaire wealth. Under an administration, let's say there was the political capital to pass Medicare for All, but there wasn't the willingness to increase or pass those taxes. Would you be willing to do what George W. Bush did in terms of with the Iraq and Afghanistan wars, with the recent tax cuts, and essentially pass the Medicare for All part by adding trillions of dollars to the deficit?
Look, I think the right way to do Medicare for All is asking those at the top to pay. We know that if we do nothing going forward, that families across this country are going to pay about $11 trillion over the next 10 years in out pockets. And that's in premiums and co-pays and deductible and uncovered expenses. I figured out how we could get $11 trillion out of the system by asking the top 1% to pay more, by asking big corporations to pay more, or in some cases to pay anything, since some of them haven't. And also by cracking down on tax cheats, my personal favorite in that list. And for me, that's what this is about. This is about asking those at the top to pay a fair share in progressive taxation. When I rolled out Medicare for All, a transition plan on this, when I rolled out my 2-cent wealth tax, when I rolled out a housing plan, I want to show how we pay for it. And part of the reason for that is because I think this is ultimately about how we think we ought to be allocating the costs of making this country work and creating opportunities into the future. And for me, I think we ought to ask those at the top to pay some more. That would move our country
Tem comprado aí, tá,
closer to
pessoal?
where other countries are in terms of the total amount of tax revenue that we collect.
Let's shift gears for a second. Suppose on day one of your administration, the tariffs on China are still in place. What would China have to do to get them lifted?
So, you know, the problem we've got right now is the president has no plan.
So what's the you have a plan?
I have a plan for
So what is the
everything.
Elizabeth Warren plan?
Well, part of it is to say we need an overall strategy on tariffs. How are we thinking about it? Trade is about tariffs, but it's not just about tariffs. In the 21st century, trade is about regulation as much as it's about anything else. What I want to see is I want to see a coherent plan for anybody who wants access to American markets. I want to ease up so that our farmers are not being squeezed like crazy like they are now. And by then have already lost markets that are going to be really hard for them to regain. A third part of it that I think is important is we need to be working with our allies. We want to have a trade deal with China that is favorable to the U.S. Then let's not declare a trade war at the same time on Canada, on our other Asian allies, on our European allies. Let's get everybody to work together on this to try to get China to follow a reasonable set of rules on trade.
But if China is hoping to wait out the Trump administration for a Warren administration, you wouldn't be willing to lift the tariffs on day one.
So the point, we can't keep doing this as one-offs. That's the whole point. We need a coherent strategy, a strategy that works with our allies, and a strategy that makes clear where our long-term interests lie in trade. I want to see trade occur, but I want to see trade occur in a way that is helpful to the American worker, that is helpful to the American consumer. I don't want to see what Donald Trump is doing. He's destroying markets, he's destroying value around the world.
Would you tie Chinese human rights abuses potentially to a trade deal?
I think that, again, working with our allies, we should be putting a lot of pressure on China, and part of that pressure should be diplomatic and part of it should be economic. We need to use all the tools in the toolbox here.
Let's talk about political philosophy for a moment. Some of your competitors, Joe Biden, Pete Buttigieg, come to mind. They are selling a vision of we can heal America, bipartisanship, we can work with Republicans, etc. Do you think they're naive in 2019 to have that theory of politics?
Look, I've worked with Republicans. I've passed a dozen pieces of legislation that I've done on a bipartisan basis since Donald Trump has become president. He signed into law my hearing aid bill. It's going to reduce the costs of hearing aids. There are places where, of course, we should work with Republicans. But the fundamental question is, what do you think is broken in America? And for me, what's broken in America is we've got a country that is working great for those at the top, an economy that's working great for those at the top, and a democracy that is working great for those at the top. It's just not working for much of anyone else. And that's why I'm so concerned about Michael Bloomberg jumping into this race, dropping $37 million in 1 week on ad buys. I don't believe that elections ought to be for sale. And I don't think as a Democratic Party that we should say that the only way you're going to get elected, the only way you're going to be our nominee, is either if you are a billionaire or if you're sucking up to billionaires. Because the problem with
Aqui,
that,
ó.
if that's the case, is
Aperta aqui F,
seatbelts, because that means the government
indicadores,
is just going to work
aí vem cá tendência,
for billionaires.
aí vem cá
We've got
Move
this chance
Average,
in 2020 where
aí clica nele,
the
coloca
door is
período
this
21,
much, where we could make the kind of
método
change that makes
simples,
our economy and our democracy work for
aplicar
everyone. I want to see us
em
take
high,
a chance.
ok.
Senator Elizabeth Warren, wish we had more time. Thrilled to talk to you. Thank you very much for joining us. And Sherry, back to you.
And thank you, Joe Weisenthal. Great conversation. Of course, as we mentioned earlier, Michael Bloomberg is a founder and majority owner of Bloomberg LP, the parent company of Bloomberg News. This is Bloomberg.
This is Bloomberg.
Break Asia, I'm Rishka Gupta with the first word headlines. The US and China are said to be moving closer to a
Não sei,
deal,
Leandro.
despite heightened tensions over Hong
Os
Kong and
MetaTrade,
Xinjiang.
né?
Sources tell us the two sides are near an agreement on the amount of tariffs that would be rolled back as part of an interim deal, adding that President Trump's comments about waiting till the election do not mean talks are stalling, as he was speaking off the cuff. North Korea has released propaganda pictures of Kim Jong-un riding up a sacred mountain as Pyongyang and Washington trade new bombs. State media says Kim was displeased with President Trump referring to him as Rocket Man again this week, saying the two countries are still technically at war and the 5-decade truce could turn sour at any moment. Fiat Chrysler slumped after tax authorities in Italy claimed the company undervalued the US part of its business by more than $5 billion following its acquisition 5 years ago. The dispute relates to the October 2014 restructuring as Fiat purchased the final part of its Chrysler unit. It presents the group with a potentially hefty tax bill as it prepares to merge with French rival PSA. And the decision to step back from running Alphabet has brought a $2 billion retirement boost for Google founders Larry Page and Sergey Brin. Their announcement lifted shares and added $1 billion each to their net worth as investors welcomed the elevation of Sundar Pichai. Page and Brin each own about 6% of Google and still control Alphabet through special voting shares. Global news, 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta, this is Bloomberg. Sherry?
Rishka, thank you. And New Zealand just announced that they would give banks 7 years to increase capital buffers. Let's see how that's having an impact on the market. So, what are you seeing? Well, Sherry, here's a snapshot of the reaction to the RBNZ's decision to protect the economy from future shocks with an increase to capital requirements. We're seeing the Kiwi dollar climb further above 65, topping its 200-day moving average for the first time since July and firming up against the Aussie as well. As you can see right here by the Aussie-Kiwi cross, this as we're seeing it fall by, seeing the Aussie fall by as much as 31% against the Kiwi dollar. Now, on the back of the RBNZ's announcement, guys, we have ANZ Bank revising its monetary policy outlook, now only seeing one more rate cut from New Zealand in May next year, in light of a more positive economic outlook and the softening of the RBNZ's capital requirements proposal with a 7-year transition period instead of 5. So Aussie banks climbing as they have more time to come up with that capital of $13 billion increase. And putting up the board then to check in on Aussie shares, which are climbing. They're all snapping a 2-day decline, rising over 1% for CBA, NAB, and Westpac shares. ANZ shares, though, remain suspended from trading in Sydney and Wellington. And let's quickly get a check-in on resource stocks in Sydney. You have the energy space gaining ground as well, while crude is edging higher. This after the rally that we saw overnight as we wait on that OPEC meeting in Vienna, Heidi.
All right, well, let's get more on that. Oil could find more support as OPEC looks to get its ducks in a row ahead of those talks in Vienna. Ministers are set to decide on their 2020 policy. Markets see an extension of current curbs as the most likely outcome. Let's bring our Asia energy reporter James Thornhill. Jim, are we expecting any surprises? A little bit of an oxymoron, but will there be any surprises in this meeting?
Good morning, Heidi. Well, yeah, the outcome remains somewhat in doubt, and as ever with these meetings, we're sort of trying to read the rooms, listening to those whispers in corridors, and it's going on as always with these meetings. Iraq has been quite vocal leading up to the meeting, calling for a further 400,000 barrels cut, which is kind of curious because Iraq is probably the country that has done least to meet its output cut targets this year. It's been the most recalcitrant, and that probably won't have gone unnoticed in Riyadh. As always, it really falls down to the Saudis, who are, of course, the biggest player in all this, and they've been keeping their cards close to their chest so far. I think it's fair to say expectations are that the 1.2 billion barrels cut that was announced earlier this year, that will be extended out to probably around the middle of next year. That's probably almost priced into the oil price now. So it would be somewhat of a surprise if the Saudis got everyone to back a further extension of that cut at this point, but you can't rule anything out at this stage.
Yeah, of course, we have seen compliance has been a little bit of an issue, right, Jim? This GTV chart on the Bloomberg showing that Russia has consistently fallen short, and we're talking about exceeding their output quota for most of the year, while Saudi Arabia has done the heavy lifting. But how much of an option that Saudi Arabia have at this point. Well, just tonight they have to price their Aramco IPO.
Well, true, of course, that's a huge issue in the background of this meeting, and we've heard reports overnight that they're looking to price that IPO at the top end of the 30 to 32 Riyal marketing range. That's probably not going to be a huge surprise, given that it's going to be mostly taken up by local investors, and I guess the suspicion is that they will probably pretty much follow the direction of where the government tells them to on that one. But of course, offsetting that, they want to get a price that offers some upside when the stock does actually start trading. So, you know, it might go a little bit below that, but all the signs are pointing to a price around the top end of that. And we should get confirmation of that later on today. It's due to get priced in Riyadh later on. So it'll be interesting to watch that as those OPEC talks continue.
Jim Thornhill, thank you. Our Asia energy reporter, and sticking with Aramco, huge fees generated from its record-shattering IPO directly impacting the ranking of investment banks. HSBC will leapfrog Barclays, and JP Morgan is poised to regain its spot as the number 2 IPO bank globally. Bloomberg's Sue Keenan has more. Sue, so what's the story here?
Well, you have to understand that big banks, investment banks, had been wooing Saudi Aramco for years, knowing there might be a deal like this. And some banks did a lot better than others. And that is impacting what we call the league tables. And this is the ranking of the top 5 with the volume in the Aramco deal. When this deal is set to close based on it hitting a full fundraising target of $25.6 billion, that's when we'll see the rankings really change. And HSBC apparently will be the biggest beneficiary. It kept its presence in Saudi Arabia through a stake in a newly organized Saudi-British bank known as SABB. If we look at HSBC's chart you can see it's going to get a bump from this because it's set to leapfrog Barclays in getting into the top 10. Barclays actually falls out of the top 10, hasn't done that in a long time. And then JP Morgan Chase, which you saw was at the very top in terms of its involvement in the deal, now jumps to number 2 globally, the number 2 biggest IPO bank. You also have SocGen, which was a minor player in the deal, but even so, the little piece alone allowed it to advance to the 9th spot. So that's a pretty big move there. Again, this is significant, and what these league tables do is they gauge the ranking of the banks in the emerging markets.
And so let's talk about BOC International Holdings. This is the only Chinese investment bank involved in the Aramco IPO. How high does that rise?
Well, it actually shoots up into the 20th spot. Hasn't been there in years. And what's important, again, is you talk about the banks that were involved in this. You mentioned it's the only Chinese investment bank to get a role in the Aramco offering, so it moves up 11 spots higher to the number 20th space on the global IPO league table. And that, again, is when the Aramco deal closes. As I mentioned, it's been 3 years since it was the state-backed firm was at that high a level. And again, this is a major shuffle for these banks, and it gives them bragging rights as well as a lot of money. Thank you.
Sue Keenan, thank you. And we have breaking news. Now we're hearing that U.S. antitrust regulators have widened their scrutiny of Amazon, and they're now going beyond their retail operations to also include their massive cloud computing businesses, as according to people familiar with the matter. Now, investigators at the U.S. Federal Trade Commission have been asking software companies recently about practices around Amazon's cloud unit, that would be Amazon Web Services. Now, the outreach by the FTC signals that the agency, which is already looking at Amazon's conduct in their online retail business, may be taking a broader look at the company to determine whether they're violating antitrust laws and harming competition. Now, the FTC and Amazon have declined to comment, but Bloomberg has learned that Amazon now faces widening U.S. antitrust scrutiny in their cloud business. You can see that Amazon Web Services revenue growth is a very high margin segment for Amazon, but the revenue growth has stalled recently. Right, coming up next, Japanese Prime Minister Shinzo Abe is set to announce massive new stimulus later Thursday. Will ask if it will be enough to shore up growth. This is Bloomberg.
Deborah Gager, I'm Hadi Stradwas in Sydney.
And I'm Sherian in New York. While the U.S.-China trade war fuels uncertainty, a global real estate giant sees resilience, specifically in Japan. LaSalle Investment Management recently opened a new fund focusing on commercial property assets in Japan. Mark Bay is LaSalle's Asia Pacific CEO and joins us here in New York. Great to have you in the studio. So, tell me a little bit why you're investing in Japan, what the fund's focus is, and what sort of assets are you diversifying into?
Right. I mean, first of all, we like Japan because right now, with a global backdrop in terms of uncertainty, low rates, political tension, etc., we do think Japan's a safe haven. So the primary reason we launched the fund is that we feel Japan's stable, it's safe, it's going to have predictable returns, and right now global real estate investors are looking for that. This particular strategy is multi-asset, meaning it's going to have logistics, residential, retail, and office in it, and it's generally on the core side of the risk spectrum, which is the low return side. It should deliver a good dividend, and that's also something very attractive to the Japanese market.
What sort of impact has the negative rate policy in Japan had over property markets in general?
Well, I mean, I think Japan is a great example of how a commercial real estate market is going to operate in a low interest rate environment, right? So we know there's a lot of negative rates in the world, a record amount of bonds are trading with those type of rates. Japan has always been a low interest rate market. It's been for the last 25 years. And I think it's also government policy to reinforce that. So that makes real estate a net beneficiary always. And really what we like about Japan is the net spread between what a property can yield and what the JGB provides, or the risk-free, is really the widest that you've got globally for developed markets.
Mark, it's interesting that you're launching this fund in Japan because I think the prevailing narrative when it comes to that economy and that market is we talk a lot about the aging demographic, the entrenchment of low inflationary expectations and low growth, hence why policy from the BOJ and from the government is largely unchanged or ever getting more expansive. What are we missing here in terms of the opportunities for growth that clearly you guys see by starting this fund?
Well, I think you're absolutely right. I mean, that is the backdrop for Japan, and that's been the backdrop for quite some time. But like I said, in the new world, I think that's what we can expect. I mean, economies are generally struggling, rates continue to be low, and I think in that type of area, real estate's a huge beneficiary. So the main reason we like Japan is that we tend to focus in the two big cities, Tokyo and Osaka. Those still have very positive fundamentals. And I mentioned earlier the yield difference between what you can get from a JGB in Japan and what you can get for commercial real estate is quite attractive. And it's really that ability to deliver consistent income over the near term and the midterm is what makes this particular product attractive, and also this market attractive. And the last point I'd add is Japan being the third largest economy in the world, and also the largest, one of the largest commercial real estate markets in Asia, it always is liquid. There are plenty of buyers, both from high net worths all the way to the REIT space, willing to buy assets, and we think that liquidity is also a great backstop.
Where are you seeing the most growth and opportunity in terms of the type of I was going to say the type of retail space, but the type of commercial space? Is it retail? Is it mixed? What are you looking at?
Well, the primary sectors we really like are logistics. I mean, logistics is a darling in the region, not surprising. It's a darling in Japan. It's been a strong performer. The growth of the 3PL market there is strong. You know, online penetration in Japan is not as high as it is in Korea or China, so there's plenty of runway there in terms of the fundamentals, and we really like that space. We really like the multifamily space, very predictable, very stable. Next generation housing affordability is an issue for them, so rental demand stays strong, and there's always net migration into Osaka and Tokyo as the two main cities. I mean, as you know, Greater Tokyo is a 40 million person metropolis, so it is a major market. So those are the two primary ones we like, but we also have office and a little bit of retail in there.
You mentioned South Korea as well. You've been expanding there. Tell us about the opportunities in that market.
We like Korea. It's a big market, 60 million people, very technologically advanced. For us, primarily in our opportunistic fund, we look at logistics. And again, we're an early mover in that space. There's not as many developers in there, and it's because the land is quite fragmented, the ownership structure. One thing that's really interesting about Korea, they've really embraced cold storage as part of the sort of online sale. So the ability to deliver, food to your door very, very quickly has become a big business in Korea, and they're sort of at the leading end of that. So we're delivering space that can accommodate that.
In your notes, you also say you like creative office space.
Yes.
What do you mean by that?
Doesn't everybody love WeWork?
Oh, yeah, until a little ago, yes.
Yeah. What we mean by creative office space, and we see this primarily in Japan, in Tokyo, smaller buildings, well located by the train stations, that maybe have not had any improvements over the last 10 or 15 years. So the ability to come in and sort of take down the drop tile ceiling, put in some new materials, kind of refreshing the space has really been appealing to IT companies that have run out of being able to get space in the central core. So it's spilling over into these smaller buildings. And there we've seen a really nice uptake and also increases in rents way above what we thought. So that's what we mean by creative, is kind of repurposing the space a little bit.
Mark, Shinzo Abe is today, as early as today I should say, expected to announce the details of this $230 billion stimulus package for the economy. Part of that will be going into infrastructure investment. Does that sort of pop up with new opportunities for your side?
Yeah, look, I think that's great news for us. It's great news for anyone that's investing in Japan. That kind of stimulus will obviously try to lift the economy. But as you know, this is a familiar story for Japan. They have done a fair amount of this stimulus before. I mean, the results tend to be positive short term, and then you get much more into the longer term trend, Heidi, that you outlined. But as I said, we're not that worried about the aging population. There's high productivity over there. There's incredible savings rate. If you look at the reserves of the country, 1.3 trillion, that makes it one of the highest countries with reserves. I mean, there's a lot of backstop in Japan. I think in the current global context, that is the place to us that feels extremely safe to put our investor capital in.
Mark, thank you so much for joining us. LaSalle Investment Management Asia Pacific CEO Mark Gabe with us there. Let's talk more about Shinzo Abe's stimulus measures, which may have a face value of $230 billion. We just asset managing editor Chris Jones. Chris, we could hear more details about this package sometime today even. What are we expecting?
That's right. Well, as you say, the speculation is around 230 billion for the top line number. The key thing, though, and this is what we're going to be looking at when the package comes in, is what is the mamizu. Mamizu. This is a Japanese term that means fresh water, and that's the key thing. How much of this is real new spending, net new spending, and not repackaged appropriations from the existing annual budget. So Japan will often have these supplementary budgets around this time of year that amount to basically repackaging previously approved spending measures, adding in loans to private companies, things that aren't real, what we would call real spending. So the real spending, or mamizu, is likely to be about half the size of the overall package. 120 billion. This is the numbers. These are the kinds of numbers that are being discussed. And the key thing is, how quickly will this be deployed? Are these going to be infrastructure projects that stretch out over a fair amount of time? Are they going to be inducements to spending to help pull out of the contraction this quarter that everybody expects, thanks to a hike in the sales tax? These are kind of the key questions that we'll be looking to answer when the package comes in.
Chris, why do they even need a package? Didn't they already try to put up some safeguards from that tax hike? I mean, they have the experience from the last hike that they had. What happened?
They did. So there's a couple of different dynamics at play here. It's quite interesting. First of all of the rhetoric that we heard from government officials about, oh, don't worry, we're not seeing the same kind of run-up in spending and decline in spending after the sales tax hike October 1st that we saw last time around. That turned out to be absolutely false. We saw exactly what happened every time before There was a big run-up in spending in September, and then everybody stopped buying things in October because of the higher sales tax. And so the economy is going to shrink this quarter. It's really an own goal. And you know, the focus on fiscal discipline at this time, when they're still trying to get the economy in gear, really is wrong-headed in the view of many international economists and from the investor standpoint as well. So they've got to fix that problem. Then we had some damage from typhoons that hit Japan and did some severe damage to parts of the country. Finally, and this is particularly interesting, there has been increasing interest in Japan in modern monetary theory, MMT. There have been seminars on MMT up at Parliament. People are talking about this, and you can kind of tell that MMT has entered the debate a little bit in Japan. And as the discussions began about this package, the size really started blowing up quite dramatically over the space of just a few weeks. It's quadrupled. And so the one kind of question for the longer term is, to what extent is there a greater appetite for ongoing spending in Japan than in the past?
Right. Let's say if $25 trillion does the trick, right? Spend your way to growth. Chris Anstey, thank you.
230 billion.
Cross Assets Managing Editor in Tokyo. Don't forget, if you're away from the screen, you can always find in-depth analysis and the day's big newsmakers. On Bloomberg Radio, now broadcasting live from our brand new studio in Hong Kong. Listen via the app, Bloomberg Radio Plus, or BloombergRadio.com. This is Bloomberg.
Daybreak Asia, a quick check of the latest business flash headlines. Hong Kong Airlines has met initial regulatory requirements on capital injection and will pay its staff later on Thursday. This according to local media RTHK. The report says all services will resume normal working times after the capital injection. The airline has faced growing financial difficulties amid the ongoing protests that have crippled tourism traffic to and from mainland China.
Bankrupt California utility PG&E said to be close to finalizing terms for a $13.5 billion payout to the victims of wildfires sparked by defective equipment. We're told it would pay half in cash and the rest in stock in the reorganized company, although no final agreement has been reached. PG&E shares rallied strongly on the news, but is still down more than 50% this year.
The owners of the New York Mets are in talks to sell up to 80% of the Major League Baseball franchise to billionaire Steve Cohen. We're told a deal would value the team at $2.6 billion and set a path for Cohen to take full ownership and control after 5 years. Cohen is already an investor in the Mets and has a net worth of more than $9 billion. That's according to the Bloomberg Billionaires Index.
The markets opened in Tokyo and Seoul at the top of the hour. Let's turn to Sophie for what to watch. So,
Sherry, Asian stocks are set to rebound after closing at an October low. Midwest continue to be a topsy-turvy trade front, and U.S. futures little change. Now we're checking in on the yen, holding steady while weakening to a 2-week low yesterday, snapping a 4-day advance in JGBs. They open lower, but could gain should a 30-year debt auction come in solid as anticipated. Treasuries futures just hovering near Wednesday's lows after cash yields climbed on Wednesday. When it comes to stocks to watch, we're keeping an eye on Nintendo after a solid week of Thanksgiving sales. We're also keeping an eye on Fujitsu. Analysts, including Citi, expect the company will have an easy time selling its listed AC unit, Fujitsu General, if it decides to go ahead with the sale of stakes in listed units. This is Bloomberg.
Vamos ver aí, pessoal. Abriu o diário, né? Vamos ver como é que vai se comportar aí. Ela dá a mão aí.
Good morning, I'm Patty Stradbot in Sydney. Asia's major markets have just opened for trade.
good evening from Bloomberg's global headquarters in New York. I'm Sherry Yan.
And I'm Sophie Kamarudin in Hong Kong. Welcome to Daybreak Asia. Our top stories this Thursday. The US and China are said to be moving closer to a trade deal despite heightened tensions over Hong Kong and Xinjiang. The next half hour brings the latest trade and retail sales data from Australia. Exports have been something of a bright spot recently.
Elizabeth Warren tells Bloomberg she supports capitalism, but the system needs shaking up.
I'm a capitalist. I believe in
Mais fraco que Caudibila isso aí, pessoal.
markets without rules are theft.
Essa abertura aí no diário.
Coming up, but first let's get straight
Ih,
to the
vai ficar
market
amassado
with
esse
Sophie.
negócio
So,
aí.
In Tokyo, we are seeing gains for both the Nikkei and the Topix. The Nikkei adding about 0.8% as we wait on fiscal spending details from Shinzo Abe, and we have the yen just trading steady, but eyeing that 109 handle.
Muito massado.
Greenback. Now switching out the board to check in on the mood. So this, as we're seeing the Kospi move this morning, we're seeing it adding about 0.5%, rising then after a 2-day drop, while the Korean won is trading around 11.91 at the start of trade, and the offshore yuan is holding steady after it firmed up and is now back below its 100-day moving average. Now switching out the board to check in on the activities this morning, we're seeing Aussie shares snap the worst two-day slump since early August, and banks are among the gainers. CBA, NAB, and Westpac gaining ground on the back of the RBNZ's decision on capital requirements and extending that transition timeline to 7 years. Now we're seeing the Kiwi dollar top its 200-day moving average, rising further above 65 on the back of that decision. And with this softening of the RBNZ's proposals, with ANZ Bank dropping one of its rate cuts from forecast for 2020 from New Zealand. And switching it down to check in on bonds, we are seeing Aussie 10-year yields just moving higher here as we're waiting on retail sales and trade. And we have GGB traders waiting on a 30-year auction later today, and treasuries fairly steady at the start of the session here, guys. And we're also keeping an eye on Nintendo, which is on the move. We do have Nintendo shares on the move, gaining ground 1.3% higher in Tokyo after recording its best sales performance in the U.S. ever, selling more than 830,000 Switch and Switch-like consoles during the Thanksgiving week. The busy period then for Nintendo, which announced plans Wednesday to begin selling the Switch with Tencent in China on December 10th for $297. Heidi.
Sophie, thank you. Let's get the first word news now with Ritika Gupta. Ritika.
Thanks, Heidi. NATO leaders have wrapped up their 70th anniversary summit with a statement of unity, but a few bumpy moments along the way. President Trump cancelled his own final press conference, calling Canadian leader Justin Trudeau two-faced after a video appeared to show him joking with other leaders at Trump's expense. Meanwhile, French President Emmanuel Macron stuck to his message, saying NATO should discuss strategic priorities rather than how much each country spends on defense. The Indian government is said to be weighing the easing of lending rules for shadow banks to allow cash-starved financiers wider access to funds. Sources tell us that ministers will discuss letting state banks offer credit enhancement against securities rated BBB+ to non-bank entities. That's 5 levels below what's permitted under current lending rules. Foreign investment in China remained strong last year, despite a worldwide decline and the emerging trade war. Global FDI slid to $1.3 trillion in 2018, but inflows to China rose almost 4% from the year before, according to a UN report. The report also shows that, for the first time, the Asia-Pacific was both the largest destination and the largest source of FDI globally. Global news 24 hours a day, on air and on a quick take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta, this is Bloomberg. Sherry?
Ritika, thank you. Sources are telling Bloomberg that the U.S. and China are moving closer to agreeing to an initial trade deal, despite recent harsh rhetoric to the contrary. Our chief North Asia correspondent Stephen Engel joins us from Hong Kong. And Steve, another U-turn for the trade narrative. What is it this time?
Yeah, is it a U-turn or is it more like the tides? The tides come in, the tides go out, it's negotiations. Obviously, there has been a lot of sharp rhetoric, of course, of late. We've had Donald Trump saying, listen, he's in no hurry to get a deal done. It might not happen until after next year's presidential election. And also, of course, there's been sharp rhetoric on both sides of threats of retaliation by the Chinese over these human rights bills that have gone through.
E lá vamos nós!
Hong Kong and on Xinjiang, all this, there's speculation that this could derail a phase 1 deal. Well, people familiar with the situation are telling Bloomberg News that we are, the U.S. and China that is, closer to a phase 1 deal. They're still trying to resolve the amount of tariffs to be rolled back. Of course, a lot of this is trying to get done before tariffs are hiked even further on December 15th. That is a tight time frame, of course. And also Trump's comments Tuesday that downplayed the need for urgency on this, also according to the people familiar with the situation, is not necessarily, should not be read as possible that talks have stalled.
E não vamos nós!
Over Hong Kong and Xinjiang, according to these sources, are unlikely to impact the trade talks. So, what are the outstanding issues? Well, how to guarantee China's purchases of U.S. agricultural products, and also exactly which tariffs will be rolled back.
See, Bloomberg Television just completed an exclusive interview with the Democratic presidential candidate Elizabeth Warren. What does she have to say in terms of her stance on China and trade?
Yeah, much of the interview, of course, was on her primary platform of, wealth tax for the wealthy, taxes above 50 million per person. Of course, she's talked extensively about that. But on trade, this is what she had to say when she criticized the president on his tact towards China.
The president has no plan. Trade is about tariffs, but it's not just about tariffs. In the 21st century, trade is about regulation as much as it's about anything else. What I want to see is a coherent plan for anybody who wants access to American markets.
She went on to say that Trump is destroying markets and value around the world with this ongoing trade war.
Steve, thank you so much for that. Steve, our Chief North Asia correspondent there. Well, we'll get more from that interview with the Democratic presidential candidate, Senator Elizabeth Warren, up ahead. In the meantime, our next guest says Asian markets are close to being fairly valued, but Hong Kong is probably the most attractive in the region. Joining us now from Singapore is Lorraine Tan, Morningstar Director of Asia Equity Research. Lorraine, it's a pretty bold call when we're continuing to see violence and unrest on the streets. On the macroeconomic front, you're seeing retail sales, GDP, storefronts closing up, leases being ended earlier. It's all looking pretty dire when it comes to the real economy. What makes you think that, I guess, the capital markets can remain immune to the unrest and the protests?
Good morning. I think first and foremost, when you look at the Hong Kong market, a lot of it is actually, not stocks that are just primarily exposed to Hong Kong itself. They are a lot of companies here that are basically Chinese focused or even globally focused. So, in a case of where we've got if we look at the market of Hong Kong, then the Hang Seng itself, it has underperformed, so it is actually trading at about 0.89 fair value estimate, making it one of the cheapest in our universe. But the thing is that a lot of that weakness is obviously on the real estate front, but there are also quite a number of other quality Chinese names, I would say, that have a greater sensitivity to the domestic economies of China, which is where we think there are more opportunities.
Is that opportunity really only materialized if we see an end to the US-China trade war and a bottoming out and then an improvement in the Chinese data? Because you could see the exposure to mainland China, and that story there is not necessarily being a positive one if those headwinds continue.
Yeah, so when we look at China, obviously the main thing for us is actually the fact that we do expect the longer-term economy to slow in China anyway. So at Morningstar, we're looking at real GDP growth for China to slow to about 4.5% in a 10-year time horizon. So what do we like within that is obviously sectors that are more domestic, more focused to domestic consumption. And we think the Chinese will still continue to spend on healthcare, education, on some of the consumer discretionary items. So if I were to, for an example, if I look at healthcare, we're expecting revenue growth there to be at 8% CAGR, so that it will exceed GDP growth, and we think there are opportunities, particularly when there's this whiplash going on in terms of the policies.
Lorraine, we have an alert on the Bloomberg at the moment. Japanese Prime Minister Shinzo Abe speaking in Tokyo, saying that the economic package has 13 trillion yen in fiscal measures. He's now saying that the fiscal package has been completed. Of course, we have been expecting these numbers to help the Japanese economy as they go through an export slump, natural disasters, and not to mention, of course, that sales tax hike earlier this year. And Shinzo Abe coming out and now saying that the economic package has 13 trillion yen in fiscal measures. The headline number that many were expecting was 25 trillion yen. But Shinzo Abe now saying that the package will be for disaster relief, downside risks, also post-Olympic downside to the economy. Of course, they're hosting the 2020 Tokyo Olympics. Let's return to our guest, Lorraine, and just ask you about the Japanese markets, because we have seen economic growth under pressure in Japan, but still their domestic consumption and their domestic economy veered towards local spending seems to be pretty resilient. Is there any part of this market that could be attractive?
Yeah, so for for the Japanese companies that we look at, we have actually liked the companies that we expect to see recovery from the inventory cycles, and the inventory obviously had bottomed out in the third quarter. Some of these stocks have actually done pretty well recently, names like Murata and TDK. We do think there's still upside to TDK, and for a lot of it is the recovery from the fact that there's 5G spending coming through. We think there will be some pickup in spending on the auto front. So that's going to drive a much better looking sort of first half for these companies.
We also have the Japanese parliament approving that phase 1 U.S. trade deal. Of course, still no mention of those potential auto tariffs as of yet. How positive is this for at least risk sentiment in that market?
We actually think when we speak to a lot of the companies that we look at, I mean, I think they still think growth, what happens in China in terms of the growth and demand in China to be much more of a driver towards their own growth. So at the end of the day, when we look at all our companies, it's basically what will benefit them if we do start to see that demand flow through again.
Lorraine, I find one of your other more interesting calls is conviction when it comes to Macau gaming. This despite when it comes to gaming revenue looking like the first annual decline since 2016. Lots of question marks over the resilience of this kind of nascent recovery there. What makes you positive on the sector? And which players in particular would you be putting your money behind?
Actually, I think the one name that we like in the Macau gaming sector is, I think, a very much individual call in that sense, and that's MGM China. We're looking at this. We're looking at it. You know, the recent expansion driving market share gains for MGM China. We do think revenue in the Macau gaming will recover. Over the next few years. Gaming does tend to have its ups and downs, but is a very good provider of cash flow to a very strong cash flow based sort of business ultimately. And we do think that the Chinese consumer will come back to Macau. It's relatively easier on a psychological level. It's actually not too difficult to get to Macau and avoid a lot of things that are going on in Hong Kong. And so we're banking on that, but mainly for MGM China is the fact that it's expanded recently, and we think the operating leverage there will continue to improve and drive margin upticks for this particular stock.
Lorraine Tan, thank you. Morningstar Director of Asia Equity Research, and recapping those lines out of Japan. Prime Minister Shinzo Abe saying that the fiscal stimulus package has been completed, that it will contain 13 trillion yen in fiscal measures. They'll be used for disaster relief, downside risks, and post-Olympics downside to the economy. Of course, the Japanese economy already forecast to shrink 2.7% this quarter, given also that tax hike that we saw earlier this year. Let's turn to Sophie and check the markets and see if there's any reaction there. So,
muted reaction in the yen to those lines on the fiscal spending package, which Shinzo Abe said will be for disaster relief and to manage downside risks, as well as the post-Olympics picture. So the yen trading at 108.84 here. And checking in on what's going on with Tokyo shares flipping the board, we do have the Nikkei 225 gaining ground after a 2-day decline. Ditto for the topics. While we are seeing JGBs under pressure with yields just slightly higher across the curve ahead of a 30-year debt auction. Dow Securities expects a trouble-free auction later this morning. Heidi.
All right, have your camera in there. In Hong Kong, we'll get more on Japanese equities ahead. Goldman Sachs' chief Japan equity strategist, Kathy Mitsui, tells us why she sees the topics on the rise in 2020. This is Bloomberg.
Watching Daybreak Asia, Democratic presidential candidate Elizabeth Warren is calling out President Trump on his trade policy. Bloomberg's Joe Weisenthal spoke to Senator Warren earlier on Daybreak Asia.
The president has no plan.
So what's the you have a plan?
I have a plan.
So what is the Elizabeth Warren plan?
Well, part of it is to say we need an overall strategy on tariffs. How are we thinking about it? Trade is about tariffs, but it's not just about tariffs. In the 21st century, trade is about regulation as much as it's about anything else. What I want to see is I want to see a coherent plan for anybody who wants access to American markets. I want to ease up so that our farmers are not being squeezed like crazy like they are now, and by then have already lost markets that are going to be really hard for them to regain. A third part of it that I think is important is we need to be working with our allies. We want to have a trade deal with China that is favorable to the U.S., then let's not declare a trade war at the same time on Canada, on our other Asian allies, on our European allies. Let's get everybody to work together on this to try to get China to follow a reasonable set of rules on trade.
But if China is hoping to wait out the Trump administration for a Warren administration, you wouldn't be willing to lift the tariffs on day one.
So the point, we can't keep doing this as one-offs. That's the whole point. We need a coherent strategy, a strategy that works with our allies, and a strategy that makes clear where our long-term interests lie in trade. I want to see trade occur, but I want to see trade occur in a way that is helpful to the American worker, that is helpful to the American consumer. I don't want to see what Donald Trump is doing. He's destroying markets, he's destroying value around the world.
Would you tie Chinese human rights abuses potentially to a trade deal?
I think that, again, working with our allies, we should be putting a lot of pressure on China, and part of that pressure should be diplomatic and part of it should be economic. We need to use all the tools in the toolbox here.
Let's talk about political philosophy for a moment. Some of your competitors, Joe Biden, Pete Buttigieg, come to mind. They are selling a vision of we can heal America, bipartisanship, we can work with Republicans, etc. Do you think they're naive in 2019 to have that theory of politics?
No. I've worked with Republicans. I've passed a dozen pieces of legislation that I've done on a bipartisan basis since Donald Trump has become president. He signed into law my hearing aid bill. It's going to reduce the costs of hearing aids. There are places where, of course, we should work with Republicans. But the fundamental question is, what do you think is broken in America? And for me, what's broken in America is we've got a country that is working great for those at the top, an economy that's working great for those at the top, and a democracy that is working great for those at the top. It's just not working for much of anyone else. And that's why I'm so concerned about Michael Bloomberg jumping into this race, dropping $37 million in 1 week on ad buys. I don't believe that elections ought to be for sale. And I don't think as a Democratic Party that we should say that the only way you're going to get elected, the only way you're going to be our nominee, is either if you are a billionaire or if you're sucking up to billionaires. Because the problem we've got, if that's the case, is buckle your seatbelts, because that means the government is just going to work better and better for billionaires. We've got this chance in 2020 where the door has opened this much, where we can make the kind of change that makes our economy and our democracy work for everyone. I want to see us take that chance.
should mention, of course, that Senator Warren's rival Democratic presidential contender, Michael Bloomberg, is the founder and majority owner of Bloomberg LP, the parent company of Bloomberg News. Well, in the meantime, the impeachment drama continues to play out on Capitol Hill. House Democrats have hinted at the articles of impeachment they'll be bringing against President Trump and dismissed Republican objections that the entire inquiry is flawed. Let's bring in our senior international editor, Jody Schneider. Jody, in terms of the legal experts that spoke, what did we learn?
Well, what we learned was that they all agreed, the three experts that came before the House Judiciary Committee, they all said that these were impeachable offenses. The reason to have the hearing was to see whether all the testimony that has come before in the House Intelligence Committee adds up to what is considered impeachable offenses. They said absolutely. They said that there were instances that they made a case for abuse of power, bribery, and obstruction. These were legal experts. There was not kind of the drama and the fireworks, if you will, that there had been in the House Intelligence Committee with a lot of that testimony. This was much drier legal testimony. But in the end, they all came away with saying that the actions that President Trump had in relation to asking Ukrainian leaders to help investigate his rival Joe Biden added up to obstruction and to other charges that could be impeachable. This is all, of course, coming before the House would go ahead and act as the prosecutor in any kind of impeachment inquiry to come up with articles of impeachment that would be the charges. They would then go to the Senate for the Senate to act as the jury and decide whether those charges do add up to the president being impeached, being removed from office.
President Trump's allies have been fighting back, though. We saw the Republicans also bringing in their own scholar, Jonathan Turley, not to mention the White House sending emissaries to Congress. What did they say? How were they defending this?
Yeah, so the White House's defense, and they continue to make it, and Republicans have been standing by the White House on this, is to say this is a witch hunt. It's politically motivated. It's done by the Democrats to try to bring him down, to try to clear the field for 2020 for their own candidates. So that has been their line of attack. And just after this hearing, we just got a statement from the White House saying that it was a good day for President Trump, that he basically showed that this is a witch hunt, this is politically motivated. So that continues to be their line of attack.
Jody Schneider, thank you, our senior international editor. Plenty ahead. This is Bloomberg.
break, Asia, let's get a quick check on stock movers in Tokyo. And a highlight sportswear maker Descente, which is jumping as much as 8%. Not entirely sure what could be driving that gain, but perhaps on the back of Shinzo Abe announcing that 13 trillion yen stimulus package that could help, given that that is also to help with the post-Olympics picture. We're also seeing Kushikatsu Tanaka falling after posting a drop in same-store sales in November and October, while Murata is rising on a new Nikkei report that the Apple supplier has cut the size of an electronic component for 5G phone sighting.
Alright, Sophie Cameron there in Hong Kong. Coming up next, we're counting down to another read on the Australian economy, breaking those Australian trade balance, retail sales numbers next. This is Bloomberg.
Daqui meia hora, pessoal, vai abrir o mercado asiático. Vou ficar atento aí, tá?
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
All the pieces of the take. I'll take a tax.
Just getting some breaking news crossing the Bloomberg on the state of the Australian economy. October trade balance coming in at 4.5 billion Aussie dollars. That is lower than the 6.5 billion that was expected. Retail sales for the month of October unchanged month on month.
Non só eles, quer dizer,
with that coming in
fragilidade
unchanged
com
at
as
all. But that
mídias
trade balance
atualmente,
number
ela é
$4.5 billion. Just breaking that down, we're seeing October exports falling 5% from a month earlier. Imports for the month of October for Australia were little changed from a month earlier. So certainly a little bit of a dampener given that trade had been a rare bright spot amidst the mixed signals given on the Australian economy. The GDP numbers came out yesterday for the third quarter. Let's get some immediate reaction with our Bloomberg economist, James McIntyre. James, it's great to have you. What do you read of this? A little bit disappointing.
Look, that's right. The first read is a disappointing one there. I think looking at the trade data first, it's a little.
Começou, Samuel, Fluminense.
The trade balance would be declining. It's just not the right type of decline. It's not the type of decline we'd want. It's the one that's coming from the export channel. It'd be really good to see the trade figures beginning to show imports starting to pull back up. That's one of the key things it's showing, all the signs where we've got that weakness in the domestic economy. We're not pulling in those capital imports for investment. We're not pulling in those consumption imports for spending. Those imports were flat, and what we've got now is that trade surplus down on that export data, which, once we get a chance to look at the details, it might be we might be seeing that that's some of the rural side. Retail, that's a bit of that's another weak spot there, with those retail sales flat in the month. We had been seeing we needed about a 0.3 to keep that retail ticking over at the 2.5% year on year that we had been seeing over the last couple of months. But nonetheless, what we've got there is another flat outcome. It's still too soon, I think, This is the October data. It's still too soon to be seeing some of that transmission into the economy, not only from the June, July, but also from the October rate cut coming through. We've got it in those property prices where we saw the November data coming through earlier in the week. Those property prices, that translating through into a wealth effect is something we would probably expect to see in the early months of next year. I don't think we're going to get any clear air reading on the retail sales data over the next couple of months. We've seen, or we've got the anecdotes coming through that in November, keeping in mind that this flat outcome for October, in November we've got some indicators or some anecdotes that Black Friday sales was quite a strong piece of activity. So that's probably some pull forward of the December retail figures. The ABSs might have some difficulty over the next couple of months with their seasonal adjustments as to how they treat that.
Starts coming in as well.
Exactly. So it's going to be a couple of months before we get that clear air, and so that's probably what we'll be seeing the RBA on the sidelines waiting to get that reading of the dust to settle on the economic data, but also for some signs of whether their rate cuts are coming through or transmitting into the economy as they hoped.
We're already seeing the market reaction to those missed numbers with the Aussie dollar just plunging. So is that investors just factoring in the fact that the RBA could be forced to cut again despite the 3 rate cuts that we've already seen?
Look, I think that's right. I think what we're seeing here with the economic data is that with yesterday's GDP, and this is another downside surprise, we're going to be looking at that economic surprise index for Australia, sort of showing that we have been missing quite a few things. This is not the only data. Since the RBA put out their November forecast, we had a softer labour market, wages were soft, a little on the downside. We've got job ads that have come through. Overall, the picture is looking like one that suggests the economy might be threatening more to the downside of the RBA's forecast. Now, Phil Lowe said in his speech, he indicated that 0.25 is their lower band. They've got 2 cuts left to get there, and they'll be patient beyond that point. I think we're starting to see that some increasing signs of the data, at least the early data, is not lining up the way the RBA hoped.
The reliance on exports, the reliance on the growth of China is pretty well documented for this economy. How much has Australia actually meaningfully suffered from the trade war?
Look, it depends. I think one of the things that's come through whilst China has instituted its own policies to keep its domestic economy going through has been some of that stimulus, which has supported iron ore prices, and that's one of the key linkages. Australia doesn't manufacture a lot of goods to send to China, and so the linkages between, from a trade war perspective, are a little different. The key impact, I think, is more on the confidence side of things, and that's where we get things. That's where we see indicators like in last week's capex data with those investment intentions by firms, those being quelled or curbed a bit as there's that uncertainty and that business confidence dampness. That's where we're not seeing that business investment coming through, or at least the expectations shaping up in the way that we need to get firms investing and in hiring in order to get that labour market outcome that we need for the RBA to tighten things up, to generate that wage pressure, to get over the long term that both RBA Governor Lowe and Deputy Governor DeBell are looking for there to hit that inflation target.
Well, James, appreciate you joining us. Very busy week for you. Bloomberg economist James McIntyre here in Sydney. A bit of softness in the Aussie dollar in response to both of those data points missing the mark, retail sales as well as the exports number. So, what else are you seeing?
Well, let's take a snapshot of that Aussie dollar's decline. We're seeing it off as much as 0.2% on the back of those miss in retail sales and trade balance estimates. So we do have it though holding around our low 68 levels right there. Now let's switch it on, check in and the broader view here, because we aren't seeing that dent the mood for Australian stocks just yet. The ASX 200 gaining nearly 1%. So overall, Asian stocks bouncing back from an October low, but staying pretty range bound given the back and forth that we've seen on trade lines. And Japanese stocks are rising the first session in 3, but not much reaction to Shinzo Abe announcing a smaller than expected fiscal spending package of 13 trillion yen. And just a little bit more about that Aussie bounce back when it comes to the share market. That's recovering then from the worst 2-day slump since early August, with banks among the gainers after the RBNZ's capital requirements decision, which comes with a 7-year transition period instead of 5. And given that there is a better picture on that domestic economic outlook front, we are seeing Kiwi bonds under pressure, the 10-year yield adding about 6 basis points right here. And we're also seeing the Kiwi dollar gain ground, breaching the 200-day moving average for the first time since July, climbing further above 65. We also got more lines from RBNZ Governor Orr this morning saying that decision on capital requirements are final and that the central bank is on hold when it comes to the central bank monetary policy. And ANZ Bank, on the back of these softer proposals from the RBNZ, says it now just sees one more rate cut in May. So Sherry, certainly something to consider this morning. Sherry.
So thank you. Let's now turn to Radhika Gupta for the first word headlines. Radhika.
Thanks, Sherry. Japanese Prime Minister Shinzo Abe has announced a massive stimulus package to boost growth in an economy dealing with a slump in exports, a string of natural disasters, and the fallout from the sales tax hike. The measures total $230 billion, making it the equivalent of 4.5% of GDP at face value. The Hong Kong government has announced further stimulus measures worth more than $500 million, aiming to support businesses suffering from the fallout of 6 months of unrest. 9 new measures include subsidies for utility bills, as well as waivers on corporate property taxes. The rate of the total of Hong Kong stimulus initiatives since June now amounts to more than $3 billion. OPEC seems to be getting its ducks in a row ahead of Thursday's talks in Vienna. Iraq is dropping its surprise call for producers to deepen output restrictions, now saying it would be better to extend the current limits for another year. The abrupt about turn, combined with complete silence from Saudi Arabia, has left the oil market wondering what will emerge from Thursday's meeting. Switching to step back from running, Alphabet has bought a $2 billion retirement boost for Google founders Larry Page and Sergey Brin. Their announcements lifted shares and added $1 billion each to their net worth as investors welcome the elevation of Sundar Pichai. Page and Brin each own about 6% of Google and still control Alphabet through special voting shares. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Sherry?
Radhika, thank you. Amazon is facing widening antitrust scrutiny in the U.S. beyond its retail operations. Sources say investigators are now looking at the company's massive cloud computing business. Reporter Naomi Nix covers corporate influence in Washington and joins us now. Naomi, so how significant is this that we have seen earlier this year, these U.S. regulators sort of realigning and dividing their jurisdictions with these huge tech companies?
Yes, so we've known for quite some time that the Federal Trade Commission has been looking at Amazon's businesses, specifically its retail business, and looking at, how does it treat third-party sellers on its platforms. What Bloomberg just exclusively reporting is that antitrust scrutiny by the Federal Trade Commission has expanded to include its cloud services division, which makes up the majority of its operating revenue, and it's a significant and one of the strongest parts of Amazon's overall business. So this is a significant development.
Naomi, this is not the only front which Amazon is fighting antitrust concerns. It's not even the only jurisdiction where it's facing these questions.
Yes, so we have state, federal, and investigators looking at all number of technology companies in Washington. And so in one area that Amazon also faces some scrutiny is the House Judiciary Committee in Congress. They're looking at Amazon's business practices as well, including, this question of whether Amazon is treating third-party sellers on its platforms fairly. Is it fair for independent sellers to have to also compete against Amazon's private label on its platform while depending on Amazon for that business? And so that's an issue that the House Judiciary Committee has been looking at. And it's also an issue, for Amazon Web Services that the Federal Trade Commission may also look into.
All right, watch this space. Naomi Nix, a Washington reporter looking at corporate influence. We do have some breaking news crossing the Bloomberg in regard to ANZ, which is still not trading in the Aussie session. They're saying they're confident of meeting the requirements without needing additional capital, presumably capital raising there. ANZ saying that the RBNZ announcement on increasing capital buffers from Aussie banks is saying that that will translate to around a 3 billion Aussie dollar increase when it comes to their Tier 1 common capital ratio capital by July 2027. ANZ, they're providing an update and a response on those RBNZ capital requirements that were announced just a few hours ago. Something of a relief given that they have 7 years to come up with that money. Essentially, big banks now have to raise high-quality capital ratios to 16%. We have seen bank shares that are trading the likes of CBA gaining, given more time has been given to them to provide those changes. Well, coming up next, we'll be live in Tokyo, joined there by Goldman Sachs Japan Vice Chair Kathy Matsui for her outlook and the bank's outlook for 2020. This is Chevrillon in New York. And I'm Heidi Stroud-Watts in Sydney. The coming year may see investment opportunities defined by some tectonic shifts in the global economy. With Japan set to be at the centre of these developments, Bloomberg Live's The Year Ahead has kicked off in Tokyo. Let's get over there and join Bloomberg TV's editor-at-large, Eric Shanska, for more. Eric.
Heidi, there certainly are tectonic shifts taking place here in Japan, and with me to talk about them is Kathy Matsui. She's chairman at Goldman Sachs. Kathy, how are you?
Good.
Prime Minister Abe is due to announce as soon as today a new package of fiscal reform, stimulus, if you will, for the Japanese economy. The headline figure appears to be 25 trillion yen, roughly $230 billion. What do you want to see in this package to believe that it can be effective?
So I think it's frankly going to be a multi-year package, meaning that it's not all going to be spent in fiscal 2020. It's going to be divided, I think, over a course of multiple years. But I think in terms of the content, there are a number of priority areas, I think, given the slew of natural disasters that has hit Japan, not just this year, but last year and the year before. A lot of the spending will actually be quite explicitly directed at bolstering Japan's faltering infrastructure, whether that's roads or, for example, we had a lot of flooding of rivers around the Tokyo area, so drainage systems, all of that I think is going to be a primary focus. I think another potential area, though, is Japan raised its VAT a couple months ago in October. And maybe the government will say, hey, we need to cushion that blow, mitigate that negative impact by doing something for the consumer. Now, exactly what that thing will be, we don't know, but doing something to help boost consumer spending so as to ensure not a repeat of 2014, where after the VAT was hiked back then, consumption and the economy fell off a cliff. And they are very, very nervous about that happening before the Olympics.
Can these measures really stave off a recession? And furthermore, can Japan really afford to borrow more, given that it's already carrying the world's heaviest debt load?
Very good questions. We think the answer to the first one is we think it will definitely help reduce the probability of Japan entering a recession. Now, if the globe enters a full-blown recession, maybe that spending won't be sufficient, but the way that we're painting the world economy from Goldman Sachs' perspective for next year is it looks like sort of more of the same. In fact, a little bit of acceleration of growth next year. Some of the trade-related effects on exports are probably going to be somewhat mitigated. We have fiscal stimulus not just here in Japan, but elsewhere in the developed world. And we have monetary policy that's going to stay very, very lax and easy. So assuming that the fiscal stimulus comes in a timely fashion, assuming the BOJ stays put with zero interest rates, we think that this will be enough to stave off recession. In terms of can they afford it, of course it's going to balloon the already large fiscal deficit that Japan already faces, but frankly, better to do it when rates are zero than when rates are 2 or 3%. And I think that's part of the logic, frankly, is they're looking at the BOJ. Of course, there are a lot of people saying, why don't you do more, why don't you do more? But I think, realistically speaking, there's not much more they can do. So the leverage of policy is shifting away from monetary to the fiscal lever.
On that note, Japan has been at the forefront of policy experimentation, massive fiscal stimulus, debt monetization, quantitative easing, negative interest rates. Is modern monetary theory the next step? Should it be the next step?
So that's been quite the buzzword in Japan over the last couple of years. People, I think, trying to find ways to perhaps rationalize some of these very highly experimental policies that Japan's, particularly central bank, has pursued. But at the end of the day, I don't think anybody in this country, at least in the policymaking sphere, is naive enough to believe that, oh, we just create this new, economic concept and wave a magic wand, it will all disappear, right? We have a lot of debt. The population's aging. There's not enough people to pay into the system. The expenditures are blowing out of proportion, so something's got to give. So I think the reality is the governments recognize this as a pragmatic reality. How are we going to deal with this? Frankly, there's no magic wand. It's grow your economy, grow tax revenues, and try to cut expenditures. So, for example, they've now decided to hike the retirement age, which is going from 65 to 70.
Kathy, a lot of the attention, if not all of the attention in this part of the world right now is on Hong Kong, and right after that, on Taiwan. What about Japan's geopolitical vulnerabilities?
I think it's quite real. If we think about North Korea and that threat, that's very obvious. I think from a Japan perspective, China's long-term geopolitical ambitions, quite uncertain. Russia, Japan's still technically at war with Russia. There's never a peace treaty signed. So there's lots of vulnerable hotspots surrounding Japan. And I think this is actually precisely why is the government pursuing some rather uncomfortable structural changes, like getting more women into the workforce, like embracing corporate governance Anglo-Saxon style, like embracing technology. Before it was like, no, we've got an allergic reaction to this because it's going to mean job losses in the future. Not anymore. I think they're beginning to embrace these things. I'm not saying this is a guarantee for success by any means, but I think they're embracing these reforms because they know they have no other option, right? Because if they want to make themselves a little bit less vulnerable to these geopolitical threats, you've got to have an economy that's not in a coma, but that's breathing and actually thriving.
Kathy, thank you so much for joining us here. Great to see you.
Thank you.
Sherry, that is Kathy Matsui, Vice Chairman of Goldman Sachs. She talks about more women coming into the Japanese workforce. That is a policy she helped to inspire with Womenomics, a term she coined back in the 1990s. Back to you, New York.
Hey, Shasker, thank you. Our editor-at-large in Tokyo, and plenty more ahead from Japan. We'll be speaking to Melco Resorts Chairman and CEO Lawrence Ho and Sumitomo Mitsui Financial Group President and CEO Juno Tang. This is Bloomberg.
Vamos além.
You're watching Daybreak Asia. A quick check of latest business flash headlines. Saudi Aramco is said to be considering pricing its mammoth IPO at the top end of the range, confirming the sale as the biggest ever. Bloomberg is told Aramco has discussed pricing shares at 32 riyals apiece, having marketed them at 30 to 32 each. Saudi Arabia is selling 1.5% of Aramco and would raise more than $25 billion if the shares are priced at the top end.
Now, the Aramco IPO is redrawing the league table in the banking world. HSBC will enter the top 10 of equity arrangers in Europe, the Middle East, and Africa for the first time in 5 years after Barclays missed out on the offering. Societe Generale had a junior role in the Aramco deal and will advance 2 places to 9th after the IPO prices later Thursday. Morgan Stanley remains in the top spot.
The owners of the New York Mets are in talks to sell up to 80% of the Major League Baseball franchise to billionaire Steve Cohen. We're told a deal would value the team at $2.6 billion and set a path for Cohen to take full control over 5 years. Cohen is already an investor in the Mets and has a net worth of more than $9 billion, that's according to the Bloomberg Billionaires Index. Employees in financial firms across Hong Kong say divergent views on the protests are fueling workplace tensions. This as unrest in the city continues to drag on. Our Asia Tech reporter Lulu Chen joins us now. Lulu, it's really very interesting the different ways that the protests and the unrest and malcontent on the streets is really permeating every level of the economy and of Hong Kong society.
That's right, Heidi. Personal political views that used to have no bearings on work are now taking on a new significance. I think the key challenge for Hong Kong's finance industry is that it's 20% of the GDP here, and senior managers, for the first time right now, they need to really balance the act of being considerate and incorporating and considerate of all staff, employees, political views, but at the same time trying not to get caught in the controversies, and that's adding to the challenges of a slowing economy, slowing pace of deal making here in the city.
So give us some of the examples that we're seeing across the city, especially in those financial firms and how they're handling this.
I think where it's hit most hard is among the state-owned Chinese banks that are operating here in the city. We've seen incidences at BOCOM and also other Chinese banks where employees are saying they're feeling this pressure. Analysts saying that their views on SOEs, Chinese state-owned companies, actually feeling a direct pressure in the way they write their their reports. But also at international banks across the sector, from BNP to JP Morgan, Citi, we've all seen incidences where employees have had a divide on view of because the protests that have been dragging on for months.
All right, Lulu, thank you. Our Asia reporter Lulu Chen there in Hong Kong. Let's get a preview about what to watch in markets later this morning. So for financing ANZ Online.
At least in Wellington, with shares now trading net in Sydney, Asian shares in New Zealand rising about 0.5% here, snapping a 2-day drop as bank says there is no need to raise additional capital to meet the RBNZ's requirements. Now, when it comes to what we're watching later this morning, Alibaba shares certainly in view in Hong Kong. The stock has been rated a new buy at Goldman with a 252 Hong Kong dollar price target, and that applies a 33% increase from the last price, and topping targets make HSBC and Macquarie, which also have buy calls. And on the data docket today, in a few minutes, we're going to get Philippine inflation expected report, a pickup for November after slowing in October. Yet the headline number probably will stay below the BSP's range, and and consumer prices are also expected to have climbed in Taiwan, rising at the fastest pace in 5 months. And India's central bank may deliver a 6th straight rate cut, with some observers saying it's time for the RBI to take unconventional policy measures, with easing failing to stimulate the economy, Sherry.
All right, Sophie, thank you. Coming up, Credit Suisse head of APAC Equity Research, Erica Poon-Workin, joins the show to talk trade and China markets outlook.
And that is just about it for Daybreak Asia. Our markets coverage does continue. Look ahead to the start of trading in Hong Kong, Shanghai and Shenzhen. Do stand by for Bloomberg Markets. The China Open. This is Bloomberg.
Vamos lá, pessoal, vai abrir aí o mercado asiático. Vai abrir o mercado asiático aí, vamos ver aí como é que vai se comportar aí. Abriu aí, vamos ver se é pra vir o ouro é pra descer, cara. E o dólar é pra subir rasgando aí. Vamos ver. Nada, muito fraco, cara. Cobertura muito fraco aí. Fraco. Cobertura bem fraca mesmo. 10 horas da noite. É uma abertura asiática muito fraco. Sinal aí que nós vamos ter aí um movimento muito travado aí durante o resto da noite aí, pessoal, madrugada. E aí amanhã cedo, talvez aí a partir das 7 horas da noite, da manhã, né? Pode ser que o mercado aí dê uma andada com o mercado europeu. Tá? Muito travado.
Eu vou ter bem aí, tá?
Muito travado. Vamos lá, pessoal. Recapitulando aí o ouro, né? Olha aí, olha como é que tá essa situação aqui. Colocar no 30 minutos. Consolidado, né, cara? muito consolidado, ó. Ele faz um candle azul, depois outro vermelho, outro azul e depois vermelho. E tem que sair dessa consolidação. Ou ele vem aqui para cima, aí ele bate aqui nessa região, né? 77 aqui, ó. Né? 78,5 aí, 78,30 aqui. Ou ele já vem aqui para baixo aqui, aí ele tem que perder essa 71 aqui embaixo, tá, pessoal? Porque, ó, desde a tarde, das 15h30, ele só foi fazendo aqui, ó, só subindo devagarzinho, ó, os 30 minutos, ó, até chegar aqui. Aí agora, tá parado aí. Então, provavelmente, pessoal, vai ficar aqui, ó, até de madrugada, tá? Até de manhã, 7 horas da manhã. Aí quando é 7 horas da manhã, pode ser que ele dê um movimento mais para baixo, e aí esperando aí um movimento da abertura do pregão dos Estados Unidos, tá? Agora, se ele perder aqui o 14,71, o ouro perdendo 14,71 vai descambar aí, tá, pessoal? Vai dar um derretimento aí total, cervical, glacial. E aí vamos lá pro Dow, né? O Dow, 30 minutos extremamente consolidado, muito consolidado mesmo. E aí, se ele voltar a subir aí, ele tem essa região aqui para ficar consolidada até a abertura do Dow, aqui em cima. Abriu o Dow, ele pode dar uma esticada boa aí, tá? Então essa leitura aí. Então para mim o Dow vai continuar subindo e o ouro vai descer, tá? Essa é a minha leitura aí. É isso aí, pessoal. Galera, eu vou nessa aí, dar uma relaxada aí, dar uma descansada. A gente volta agora só no mês de janeiro, tá? Tô pegando férias aí do Forex só em janeiro, dia 2. E a galera do B3 aí, mini índice, mini dólar, a gente volta amanhã às 10 horas da manhã no canal do YouTube. Valeu, pessoal, um abraço aí, boa noite a todos, fiquem com Deus, valeu, tchau, tchau.